What's good, everybody? Happy Monday. Welcome to the Closing Beat. This is a quick little show that we do to update you on the stock market. We're financial advisors at Jazz Wealth Managers. We manage long-term retirement investments and long-term investments that you may have, but we cover the day-to-day stock market activity just so you're updated on how things are going. Plus, a lot of our customers are trading. The Doe Show at 1 o'clock every day this week. We're talking about trading. Those of you that are short-term traders, maybe you're day traders, or you just like trading a little bit here in the markets, we are covering everything you need to know. Today we talked about trading plans, real general to get things started. Tomorrow we'll talk about the different options you have if you're just beginning, from futures, options, stocks, Forex, and everything in between. So check us out at 1 o'clock if you have a chance. Otherwise, hit the subscribe button, hit the bell or something so you can check that out. And that's about all I have for you there. So look, today was sort of a day that if you missed, it didn't matter. The back and forth in the overall markets is really showing you that people want to wait until earnings to do anything further, right? The markets just got smacked last week and people were like, well, I don't see any news, right? So I'll wait for earnings. Really wasn't a lot of news today, so there won't be a whole lot to cover here in my opinion. But if you look over here to the left, there's a little chart. That is every 5 minutes. What did the market do every 5 minutes? And in today we're using the S&P 500. There's a red dashed line. If it's your first time tuning in, that's where the market's finished on Friday. So you can see the stock market basically started right where it left off on Friday, dropped a little, went higher a little, dropped a little, went higher a little, negative, positive, negative towards the end of the day. And that's basically people just saying, I'm not going to take any risk into the next day when we have all these earnings coming up and I just don't know what to expect. And so that's fair. So because of that, you got the Dow down about 1/3%, 0.5% on the S&P, and a loss of about 1% on the Nasdaq 100. Money continues to come out of the big growth tech names, those stocks that went way too far too fast. Money keeps coming out of those. We'll cover those in just a second. Earnings season, I mentioned already, that is underway. We're getting our sort of groove going here with earnings season. I made a list tomorrow. We have Johnson & Johnson, United Healthcare, Netflix, IBM, Goldman Sachs, Morgan Stanley, BlackRock, CSX, all tomorrow. So those are big names. There's a bunch of them tomorrow. But those are big names that are going to report their earnings tomorrow and are going to grab the headlines. We'll try to cover every one of them here for you, provided everything goes smoothly. This year, analysts expect 19% earnings growth. So the bar is set pretty high. We've already talked about how earnings this earnings season, not this year. This earnings season, analysts expect 19% growth in earnings. We already talked about today how those numbers are going to be fudged. They're going to be just fine. They'll get close. But revenue and margins are going to be a big focus. As they come in, I'll point that out as we go, unless I'm totally wrong, and then I'll point that out as well. Why not? So that's that. Now, as far as economic numbers, every day some kind of economic number comes out. Wednesday, Thursdays usually get all the attention. Today there were some retail numbers that came out. Small, tiny little uptick in consumer spending in the retail space. Auto sales really got the bulk of all of the consumer dollars since the last report. The one thing that stuck out, and I tweeted this, by the way, if you want to follow us on Twitter at Jazz Wealth, I'll just tweet out interesting things that happened throughout the day. One of them was that consumers, for the first time, the number dropped for the most in 2 years. Consumers are backing off on restaurant spending and bar spending. People trying to get their dough straight. That area of this study fell by the most that it's fallen in 2 years. So I don't have a good answer for that, by the way, other than people are a little nervous to go to Chipotle. I don't know. So that was just an interesting metric I thought I'd point out. Let's go over to the charts and take a look what's going on there. Here's the Dow all the way back to the trend line. We've been talking about that. The Nasdaq desperately trying to hold on to its trend line. The S&P 500 also stuck right at that, basically the 200-day and the uptrend line there. Very important areas for all of these markets. Earnings are going to decide what happens going forward. Gold stocks and the gold price in general. Where was gold today? Gold almost up 0.75%. So continuing what happened there on Thursday. And then if you follow the gold mining stocks, anybody that participates in the gold space, investors keep coming over to that sector. Why, do you ask? Well, thankfully I have the answer. So gold has been like nobody cared. Nobody wanted to be a part of gold for all this time. You could see the price just slowly sold off and gold basically did nothing for the last couple months. Well, now the markets get a little bit scary, right? You guys have been around. You saw what the markets did over the last couple weeks. So people go, well, I'll buy volatility, right? I'm scared, and so I'll buy my protection using volatility. The problem is volatility is too expensive. So you can't go and use that hedge for volatility there. And so everybody says, well, shoot, I hope there's gold. Can I use gold? Hey, look at gold. It's discounted, and so maybe I could use that as a hedge. So those people that are trying to do that with their portfolios are finding their hedge in gold, and that's why you just kind of see that going up there. You can see the correlation between between the markets and gold. I'm sorry, the inverse correlation. So transportation stocks, that one gets a little note today. Short term, it fell off a friggin' waterfall. That is a waterfall drop at its finest. So if you ever wanted to study the waterfall drops and what happens next, this is a great one to save. Watch it going forward. Anyways, today a 0.5% gain in the transportation stocks was a little bit better on the day, but I don't know, 0.5%, that's not too bad. Anything interest rate sensitive, you got utilities recovering a little bit, REITs recovering a little bit. Either way you look at it, that's fine. Either way you look at it, REITs recovering about a 0.5% on the day. So anything in that category, interest rate sensitive, seemed to get a little bit of a lift today. Still weak overall though. Individual stocks, you got Sears officially filing for bankruptcy. We tweeted that out earlier. And like I said, if you follow me on Twitter, I'm not going to try to tweet things that everybody knows. I like tweeting the things that are kind of interesting. So I believe we put this on Instagram, that Sears files for bankruptcy. At the same time, if you look at their careers page, they added 75 jobs. So what? How's that? How are you going to pay those people? And so I posed the question, would you work for a bankrupt company during the holidays, for a holiday job? That seemed a little bit suspicious to me. Anyways, they added the jobs. If you want to go work at whatever Sears is still open in your area, if there is one, hey, all the more power to you. So Whirlpool also, there we go, sorry. Whirlpool also put out a statement saying that as far as accounts receivable from Sears, they weren't going to get hit very much. Only about 1% of their accounts due in receivable come from Sears. Remember, they were a big seller of them, especially online. So we'll see what happens there. Bank of America, here we go. This is something interesting. Bank of America reported earnings today. They said higher interest rates, higher loan growth, and cost cutting. Haven't we heard that before? Higher interest rates, higher loan growth, and cost cutting help them beat on earnings. Now think about that for a second. There's always trends that happen in an earnings season, and you start to pick up on them real quick. And what happened with Wells Fargo? What happened with Citigroup? What happened with JP Morgan? Those three came out with earnings on Friday, and they all said, hey, look, we've got some decent loan growth going on here. Bonds trading was big for them, blah, blah, blah. Lots of things going on, cost cutting. And we've got all this other good stuff going on. Why do they keep mentioning that they're cutting costs, right? If times are so good, shouldn't they be expanding? So it's something you want to pick up on there. The bank stocks keep saying we're cutting costs, we're reducing, we're scaling back, we are letting go of people. We're not going to stick with areas of our business that are not as effective as they used to be. Cost cutting. Isn't that interesting? Now tomorrow, Goldman Sachs, Morgan Stanley, and BlackRock. BlackRock's sort of on the outskirts there. But Morgan Stanley, Goldman Sachs. Do we hear the same thing from them? In addition, right? So little hint there. You're getting it first here on the closing beat like it's something special. Now, that's a little hint. Now, so with the banking stocks, what's happening? They're all reporting earnings. Remember 2 quarters ago when we really got this thing off the ground, 2 quarters ago, the bank stocks were reporting good earnings. Everything was fine, but they were being held back, right? So look back over here with Bank of America, right? It didn't do anything when they reported their earnings. If we look at the banking sector, remember they all reported and it was why won't the banks do anything? Everything's going really well. Then we had an earnings cycle where everything went well. They had good earnings and everything started moving higher. Here's the same thing again. These guys are reporting earnings, only people want to sell into the news rather than buy it. Was it a big deal before? Nope, didn't matter. What was the major headline? Oh my God, bank stocks are selling off into their good earnings. It must mean the top of the market, right? So that was the narrative just 6 months ago. Now we're going through the same thing once again. A little more volatile this time, I'll add. But it's interesting to see how that pattern is just repeating itself. The only difference is cost cutting. I keep seeing cost cutting. Why would a bank be cutting costs if times are so good and interest rates are going up and loan growth is going up, wouldn't you want to compete for that business more and go sort of spend it to acquire? And you're not seeing it. Anyways, ATVI lower by 3% today. A lot of optimism over this Call of Duty digital service that they're coming out with, or that they've already got there that's coming. I don't know. Shares were lower on the day. I noticed a lot of those big tech names did sell off with it. We'll go through a handful of those in a minute. I'll go on to Netflix real quick. So Netflix down about 2% on the day. You had Goldman Sachs and Raymond James both came out with lowered price targets today. Goldman Sachs lowered their price target to 430 from 470, which you could, I mean, look, 470, really? So 430 is much better, closer to the highs there. Raymond James went to 400. They were a lot more negative. They also commented higher interest rates are going to be kind of hurting them. So they both said some interesting things in the short term about maybe some negative prospects, but they interestingly both have higher price targets. So one of the things I'm going to start tweeting about is these analysts specifically that say this stuff, what's their track record? It's tracked, and I'm gonna start sharing it with you on Twitter. So anyways, you got Netflix coming out with earnings. I already mentioned that earlier. They're going to have earnings tomorrow. The key takeaway from this one today, if you like stats, if you like sort of all this geeky stuff, they missed on subscriber numbers last quarter. They never missed twice. I'm not saying buy the stock. I'm not saying it's going to go higher. I'm saying they never miss 2 quarters in a row. Netflix doesn't like that. I believe the CEO even said something about a year ago. Anyways, they missed on subscribers, international subscribers last quarter. They don't miss twice in a row. Will this be the first time? That'll be interesting to see. That'll be tomorrow. So we'll get the earnings out on that tomorrow. You got Ralph Lauren higher by 4% on the day. JP Morgan upgraded it. They said that the earnings problems that they've been going through here recently, it's going to turn the corner right now and it's going to start heading higher. So that's their call. Dollar Tree finished flat on the day. It was downgraded today. Really a no-name analyst was out there. They said, we went to the stores. In the Southeast region, I believe. We went to the stores. We looked around. We didn't see a lot of traffic. I hate that kind of research. I really, really hate that kind of research. And lastly, you got Harris Corp. They're merging with 3L, or L3, sorry. Type 3Ls. So both of them higher on the day. Huge merger. This would be the biggest defense merger ever. Even bigger than Boeing and McDonnell Douglas. Remember way, way, way back? I believe that was even before my time. I'll point out Apple. So I tweeted this one. This was the first one. If you follow us on Twitter, @JazzWealth, this is the first shot here. Did I lose you? Let me see real quick. It's probably just catching up. Give it a second here. What's the deal? What's the deal? I think it's fine. Either way, I'm just going to talk right through it. So I tweeted this one here. Apple, there was an analyst that came out and basically said the earnings are going to slow because of Chinese growth. And then I looked up his track record. He's been correct, or he's profitable on 62 out of the last 123 calls. There we go. Sorry about that. I'll just bring it over here and then we'll put that back up. Maybe that'll help. So he's got a 50% success rate. 50-50 shot. So if you're going to listen to somebody and you know now that 62 out of 123 of their recommendations, their bullish or bearish calls, are profitable, I mean, really, is that no better than just throwing a dart at the wall? So I'm going to start tweeting out that kind of stuff to see. You know, I want to keep things going here. And finally, Adobe. What's that? What's going on there? So Adobe was one of the biggest losers in the Nasdaq today, and it's up. It's reversed all of its. I don't see the news just yet. Adobe higher by 5% here after hours. It was down 4 1/3% throughout the day. So maybe they came out with, I missed whatever they came out with. But that stock 100% reversing course here after hours. That's kind of interesting. And what did I say about Mr. Carl Icahn? Right? If I could find like a really good video editor, social media person, hired. I'd take him in a second, because remember last week I was saying, where's Warren Buffett? Where's Carl Icahn? They're all being quiet. Today, Carl Icahn back on TV going, hey, guess what? I was buying the company that tracks the Dell shares, and I'm going to go and get in the middle of all of this and try to pick a fight. Well, not a fight. He didn't want to say a fight. So where was he? He was quiet during that mess. Just like I said, he was buying. Where's Warren Buffett? We'll see what happens. I'm sure we'll be seeing him soon. Anyways, yeah, I believe that's all I have for you there. I missed some of these text things there. Sorry. Oh, yeah, so we're good. We're back, yeah. I don't know. Computer's got a case of the Mondays. 32,000 feet, man. Boy, David does a lot of traveling. So you would work for a company going through bankruptcy. Yeah, that's interesting. I just thought it'd be interesting. Just sort of funny. Sending love out to Florida. What about these Canadian pot stocks? 48 hours to go. The countdown. What did I see? Canopy? Was it Canopy Growth today? Did well? Yeah, Canopy Growth, 14%. I don't really follow these things much. Tilray, a tiny, yeah, oh no, not a tiny bit, 11% on there. Yeah, I mean, I guess people buying ahead of that is the real question. So they buy ahead of the, 48, what do we got? 48 hours, you say? So what happens when we go live? People buy on the prep, sell on the official news there? We'll see. Let me check the news here. What else do we got? Banks cutting costs. Yeah, covered that. We covered all the earnings for yesterday. And stocks basically just back and forth until earnings. Now, the bulk of it's going to start being here in the next 2 weeks, right? So we've got earnings as far as the bulk of it coming up. So just be aware. If you own individual stocks, if you're a trader, like we're talking about on the Doe Show every day at 1 o'clock, if you're a trader and you're active with stocks for some reason, that's what you like to do and everything, you better know the earnings date of your particular stocks. Don't follow these penny stocks. Anything over the counter, don't really follow. That's in the cannabis space, Alan, the ICNAF. You got all those cannabis stocks getting a bid just before the launch there. Icon Enterprises, there you go. Yeah, he added 1%. You like it down here, Paul? We'll see. We'll see. Can't really say. Actually, Icon Enterprises, I always remember that being pretty boring from a more of a trading standpoint. I could see it's definitely not now, but something to check out. Anyways, sorry about the screen today. I would, yeah, Sears will not be paying $15 an hour. That's interesting. I wonder what they will be paying. But anyways, if you get a chance, follow us on Twitter. That helps us out. I will promise to post more interesting things there that are stats related. Not interested in the drama. I won't be posting that sort of stuff, but we will definitely cover anything that maybe is interesting that doesn't make the major headlines, and maybe some of the major stuff too. All right, thanks a lot, guys. We'll be back tomorrow for the Doe Show. Remember, we're doing trading this week, talking all about trading. Tomorrow, we're going to talk about the trading products, all the different options that you have for trading, and what do they do? Like, why would you use them, and all that great stuff. And most importantly, how do they work? Yes, that's Emmett Smith in the background. Thanks for noticing. Talk to you guys later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.